we know the title's a bit clickbait, but hear us out. First, let's look into what yield management actually is. Looking online, there are hundreds of articles, videos, and blog posts trying to outline exactly what yield management is. The concept of yield management is based on understanding, anticipating, and influencing your guest behavior to maximize revenue or profits for your hotel. Ultimately, it's how you make more profit from your accommodation and from your entire property. But yield management isn't the best term to use anymore. Why? Like we said earlier, yield management is ultimately how you make more profit from your entire property. But it's got a far narrower focus than revenue management. Nowadays, revenue managers are not just looking at the selling price and volume of sales. Instead, they're looking at the costs associated with the sale, the customer segments such as leisure and business travelers who are willing to pay different prices. Let's hear from an expert on the matter, Shannon Knapp.
So my name is Shannon and I'm a product consultant here at SiteMinder in the Sydney office. And I was actually a user and a customer of SiteMinder products for more than a decade. And then I started a little consulting company a couple of years ago. And I work with various product teams around SiteMinder on how hoteliers use the products. So yield management as a term isn't incorrect or offensive in any way. It's just what we used to call the simple practice of making more profitable and benefiting from the right customer at the right time, at the right price, at the right segment, and through the right channel. Yield management is certainly correct and revenue management is still right too. It's just that we use them interchangeably, and revenue management is the evolution of yield management. So as an industry where we started off in hotels, when I first started yield managing hotels a long time ago, we still called it yield management because it was born from the airline industry. And even though the airlines like to think and claim that they invented yield management, they didn't. Any business that has perishable inventory or a product that expires at a given point in time, grocery stores, airlines, lots of different industries yield manage. But what the airlines did for us was that they gave us systems that made it possible and made it a lot more efficient and less manual. And so in hotels, when we adopted that technology and some of those processes and profitability tasks, then we've taken the learnings and the systems from the airlines and evolved it for hotels and evolved it to make it more purpose specific for hotels. And so the evolution of yield management into revenue management is that now it incorporates the whole property. So not just rooms, but the whole property as in ancillary revenues, different outlets, and that might be a restaurant, that might be a spa, or in smaller properties, the ancillary revenues that contribute toward total revenue management might just be bike hire or parking, anything that contributes to the overall revenue and profitability of a hotel. And revenue management, of course, now incorporates your distribution strategy and other market segmentation activities as well.
In short, the idea of evolving from yield management to revenue management is to broaden your focus and increase your distribution reach into new markets, and to use data to understand, attract, and retain different customer segments.